Hi everyone. I am Pola. Welcome to Educational Trades channel. In this video, I'd like to explain you a profitable strategy by using pivot point indicator. I have talked already in another video about the main characteristics of this indicator. To sum up, is a technical analysis tool thought for identify the overall price trend when it's supposed to be strong and when the asset's price is overbought or oversold. This strategy can be applied to stocks, indices, and currency pairs with different time frame, but it fits better with daily and weekly time frames. First step for a daily trading investment is to get pivot point data of the previous day of the financial instrument that you are following. For an investment longer than 3 or 4 days, you need to get weekly data. You can calculate them through our website, link in description. You can find them online or calculate by yourself. You will have two main strategies to choose between, but in both cases, if the price is between resistance 1 and support 1, it is not prudent to invest, as the price is considered in a neutral area. With these strategies you may combine with pivot point indicator, the relative strength index indicator, set with 12 periods, and the Bollinger Bands, set at 24 periods, and standard deviation, at 2 periods. The first strategy provides that you wait for a level breakout to decide when to invest and if you want to sell or buy the asset. For example, if the price goes from above to below to support 1, it means that the asset is taking a bearish direction. If the price goes from below to above to resistance 1, it means that the asset is taking a bullish direction. If the price breaks the support 2 or resistance 2, the indicator considers strong the price's trend, so it should be a good moment to open a position. If the price goes under S3 level or R3, we are in front of a hypertrend situation, and the price might be oversold or overbought. I suggest you to take this situation as a good exit point, as you could face a bound or even a reversal trend. You could therefore open a position in the opposite direction point if you're not only a trend follower. To fix stop loss and take profit levels, just use the support and resistance borders. Of course, all of that is about the leverage and the portfolio management that you use. The second strategy is very good if you are not a professional trader or you have no time to check the breakout levels real time. According to your needs, with this strategy you can choose to open a trade some minute before or at the open of the American, European, or Asian market session. Just check pivot point data and the area where the price is situated. Then, when a market session is about to start, or it started some minute before, not more than 1 hour anyway, open the position. When the price is between resistance 2 and resistance 3, open a long position, vice versa, open a short position. Like the previous strategy, you can set stop loss and take profit levels in relation to the support and resistance borders. Before any investment, don't forget to check the economic calendar. For stocks, check out also the earning and the dividend calendar. This, to avoid the unpredictable volatility generated by the release of the news that might negatively affect your investments. I will always underline that no matter the strategy that you want to follow, it is safer to include more than one indicator on your studies. Thanks for your attention. I hope you have found this video helpful for your trading performances. If you wish, subscribe to Educational Trades channel and to the website too. Bye bye.